Singapore arbitrator rules against mining software firm Poolin's IOU model, but the firm hasn't paid yet. Poolin had issued IOU tokens in exchange for its users' crypto deposits. A Singapore arbitrator said that's not okay. An independent arbitrator in Singapore has ordered embattled crypto mining software firm Poolin to return 88 bitcoins, BTC, worth about $1.5 million at recent prices, to a customer whose withdrawals were halted and crypto turned into IOU tokens. Poolin Wallet said on September 5 in a Medium blog post that it was experiencing a liquidity crunch, meaning it didn't have assets immediately available that customers could withdraw. The firm thus officially paused withdrawals in early September and told customers that their funds would be converted to IOU tokens, which could be converted back to crypto quarterly. But, on Tuesday, Poolin CEO Kevin Pan told CoinDesk that the IOU payouts haven't been issued yet because the company's cash flow is still low. Li Bei, the claimant in the Singapore case, said in an arbitration filing that the move broke Poolin's obligations according to its terms of service, and managed to find justice in arbitration. David Kreider, the arbitrator, ruled in October that Poolin had to return some of the users' funds immediately, though the order still needs to be approved by an arbitration tribunal, according to the document, which CoinDesk reviewed. Pan confirmed the arbitration order to CoinDesk via Telegram in December. "We're working on it, paying the user back," he said. The CEO expects his firm will be able to pay Li during the first half of this year, depending on Poolin's cash flow and the market. The arbitrator said Poolin should pay soon. In August, just before the turbulence was made public, Poolin's mining pool had about 10% of the hash rate, a measure of computing power, of the entire Bitcoin network. Data from BTC.com's website shows its share is now 2.63%. Poolin has distributed at least another $238 million of such IOUs, according to Nansen analyst Andrew Thurman and independent journalist Colin Wu. Holders of those tokens could in theory claim that Poolin didn't fulfill its obligations as a service provider, exacerbating the firm's existing problems. In early December, Poolin said that some balances would be paid out later in the month, but angry customers who have yet to see any funds have accumulated in the company's Telegram support channels, with some saying they should hunt the thieving CEO. Pan didn't respond to CoinDesk's request for comment on that. The company has said it expects to pay out all balances in 1 to 2 years, as only 10% to 20% of each account balance will be paid out per quarter. On December 22, Poolin said that it was terminating its Mars project, a hashrate token project that received investment from now bankrupt Singapore hedge fund Three Arrows Capital, to focus on IOU tokens. The arbitration case, Li had $101,236 and 83-cent coin, USDC, $101,985.20604947 Tether, USDT, and 88.15571 BTC in Poolin's wallet service on July 15, according to the emergency arbitration document seen by CoinDesk. He was unable to withdraw the tokens on that day when he tried. On September 13, Poolin announced it would be converting all users' balance to IOUs in order to deal with its liquidity issues. The IOUs could be traded for other cryptocurrencies every quarter on a one-to-one basis or swap for Poolin services. The firm had originally said on September 13, in practice, Poolin Wallet will offer IOU token-to-token single-direction swap in the trade function, allowing users to trade their IOU to BTC, UETH to ETH, IOUs to either USDT or USDC, ILT to LTC, UZEC to ZEC, IOU Doge to Doge, quarterly. Also, Poolin Wallet is likely to increase the frequency and amount of redeem as long as the liquidity becomes available. Meanwhile, users could withdraw their IOU tokens and trade on-chain or even with third parties, if available, freely. On September 19, Li found that, without his approval, his tokens were changed to equivalent IOUs of each cryptocurrency. Not only was that a violation of the terms of service, but the IOU tokens have virtually no value, because they cannot be traded on exchanges and their price is not tracked by information platforms like CoinMarketCap, Li argued. He said he was stonewalled by Poolin CEO Pan when he tried to get answers. Poolin has said that IOUs can be exchanged for mining machines, but according to Li, the ones the firm was offering were immersion or hydro-cooled, a technology that is not friendly to home miners. The mining firm was also offering Poolin equity in exchange for IOUs, but that isn't worth much, Li said. Separation of companies. On top of that, during the arbitration procedure, Poolin tried to tamper with evidence to throw out the case, according to the arbitration document. The software firm argued that Singapore was the wrong jurisdiction, because the terms of service aren't issued by its local entity, Poolin Technology Private. The name of the local entity disappeared from Poolin Wallet's website and app sometime between September 19 and 24, Li said. While Kreider didn't rule on the issue of evidence tampering, he seemed to throw his weight behind the allegation, saying that the evidence warrants an emergency order. Joshua Vasquez, a user who transferred funds from the pool balance to the wallet once it became impossible to do anything else with them on September 13, the date Poolin announced the IOU plan, said he was deleted from Poolin's Telegram group for asking questions. The Poolin community admins refused to respond to any questions remotely related to their interactions with Poolin Wallet, and further claimed that they are separate entities, Vasquez told CoinDesk. Pan didn't respond to a request for comment on the allegations of evidence tampering or Vasquez's claims.